Hey, good morning, everybody. Welcome to another day of Mark Report brought to you by Mike Bjork. Today is Hump Day, and it's Wednesday, March 2nd. Hey, we got two important data pieces for today, and we'll start off with the ADP employment. This is basically numbers that ADP comes out with for private sector jobs. So last month, or at least in January, it was revised lower. And it was at, I believe, 205, and it was reduced down to 193 for job creation in the month of January. So people are a little disappointed in January's numbers, and they thought it was actually forecast was supposed to even dip a little bit further down to 185 for the month of February, but it jumped up to 214. Watch this. This is going to be something to be very careful, and this is kind of our precursor for the Bureau of Labor Statistics numbers coming up in Friday. So this could potentially be one of those good news, it may be bad news type of thing. So if the investors sees this good news being reported, it may be bad news for them in the sense that they're going to be concerned that the Fed may go ahead and continue with their tightening range and may raise rates again this year. Now, the odds of them raising rates before, with some of the bad data we got, back in January, it was reduced. So basically, they thought the Fed may not tighten up again this year, or at least until later on. But if we keep seeing this good news, like especially the jobs improving, it may they're going to take the data and probably run with it and maybe tighten up again sooner than later. Now, later today, by 11 o'clock Pacific Standard Time, the Fed Beige Book will come out, and this may shed some more inlight and could create some more volatility in the market today. Already, we've been seeing some up and down fluctuations today, and a lot of that has to do with, as will come up here very soon, is oil. Oil went down slightly, and then there's some news that came out on some inventory levels, which was reduced lower than we thought and went up again slightly. But stock market was down further, and after the oil, the news on the oil, and a lot of it had to do with oil came down, so it's down further. But when the better news came out for the oil and price went up, the stock market reduced its losses so for the day. Also, there was comments by Fed member Williams. He's out of San Francisco, and he is a close ally with Janet Yellen. And basically, he doesn't foresee the problems going on in China affecting the U.S. economy on our domestic level here. He still thinks that inflation will move up to where it needs to be, and basically, he's more bullish about where things are going, in other words. So let's go ahead and take a look here at the bond market. And the bond market was pretty much where we left off yesterday. As you can see, we did drop down a bit and weren't able to recuperate and go above the 25-day moving average. As you can see, that star effect, we did have some fluctuations on the positive and negative side of things, but at this moment we're at basically nil. So we're about the same where we left off yesterday. Depending on the time when the investors came out, we could have potentially had worse pricing than where we left off yesterday. So good chance that we probably will have negative pricing today, because as you can see, there are a lot of times they didn't really put in a price for the worst yesterday. So a lot of investors may have rolled that worst pricing into today's pricing. So most likely you're going to see investors, lenders coming out with worse pricing today because they probably didn't roll it into from yesterday, as you can see the drop. All right, folks. Unfortunately, bad news is rates climbed up a little bit today. And we'll kind of wait and see. The job numbers will be out this week, so expect a little more volatility this week. Tomorrow we got the weekly jobless claims, and then even today we got the Fed Beige Book coming out. And if there's any positive insight of tightening or things that indicate that nature, you can see that would be a positive for the bond market, but negative for the stock market. All right, have a great day. We'll see you tomorrow. Thanks for watching. Bye.